Hey everyone, welcome back to Corporate Decoder, the place where we uncover the hidden stories in corporate filings. Today, we're diving into DTE Energy's latest 8K report, and let's just say they're planning to juice up their common stock pretty significantly. So what exactly is this filing about? DTE Energy, a well-established player in the energy sector, has announced a massive plan to offer and sell shares of its common stock. We're talking about an aggregate offering price of up to a staggering $1.5 billion. This isn't just a simple stock sale though, it involves a complex web of managers, forward sellers, and forward purchasers. Before we get into the nitty-gritty of why they're doing this, let's quickly look at what is registered. DTE Energy has its common stock trading on the New York Stock Exchange. Under the ticker symbol DTA, they also have several series of junior subordinated debentures, which are basically long term loans with different interest rates and maturity dates also listed on the NISE. These debentures range from 2017 to 2025 issuances, with interest rates from 4.375% up to 6.25%. Now, let's get to the heart of the matter. On the 19th of December 2025, DTE Energy entered into what is called an equity distribution agreement. Think of this as a master agreement that allows them to sell their stock in the market over time. The key players here are the managers. These are investment banks like Barclays Capital Incorporated, BMO Capital Markets Corporation, and Bank of America Securities Incorporated. Among many others, they are the ones who will be facilitating these sales. You also see names like forward sellers and forward purchasers. This part gets a bit more interesting. The company can enter into forward sale agreements. In simple terms, DTE Energy might agree today to sell shares at a future date. The forward purchaser might then borrow these shares and sell them immediately in the market. DTE Energy doesn't get the cash right away from these borrowed shares. They expect to get paid when they physically deliver the shares later, or they might opt for a cash settlement where they might even owe money or shares depending on market conditions. This is a way to lock in a price or an arrangement for future capital. The agreement allows for shares to be sold through brokers on the New York Stock Exchange at market prices or in block transactions. The managers can earn a commission of up to 2% of the gross offering proceeds. It is important to note that DTE Energy is not obligated to sell any shares. They can halt these sales at any time. This flexibility is crucial for them to manage their capital raising efforts based on market conditions and their needs. So, what is the money for? The proceeds from this offering, after deducting fees and expenses, are intended for general corporate purposes. This typically means funding operations, making investments, and potentially injecting capital into their various subsidiaries. For an energy company like DTA, this could mean funding new power generation projects, upgrading infrastructure, or supporting their diverse business segments. This whole equity distribution agreement and the forward sale arrangements are quite significant. It is a way for DTE Energy to access a large chunk of capital flexibly. The total offering price is up to $1.5 billion. This means they could potentially sell a lot of stock to raise that amount. Now, let's take a step back and think about what this means. Raising such a large amount of capital through equity issuance can have several implications. On one hand, it strengthens the company's balance sheet, providing ample funds for growth and investment. It can also reduce reliance on debt, potentially lowering financial risk. However, issuing more shares dilutes the ownership stake of existing shareholders. Each existing share will represent a smaller piece of the company after new shares are issued. So, if you own DTE stock, you need to be aware that your percentage ownership might decrease. The forward sale agreements add another layer of complexity and opportunity. They allow DTE to potentially benefit from future stock price movements, while securing capital. However, they also introduce risks, especially if the company decides to cash settle or net share settle these agreements, and the stock price moves unfavorably. The company might end up owing cash or more shares than anticipated. Looking at DTE Energy's overall strategy, this move suggests a strong drive for growth or a significant investment in upcoming projects as an energy company. They are facing a rapidly evolving landscape with increasing demand for clean energy and the need to maintain and upgrade existing infrastructure. Raising $1.5 billion indicates they have ambitious plans to meet these challenges and opportunities head on. It is a strategic financial maneuver to fuel their long-term vision. In my opinion, DTE Energy is making a bold move to secure substantial capital. The dual approach of direct equity sales and forward agreements offers flexibility, but also comes with inherent risks. The company's ability to effectively deploy these funds will be the ultimate test of this strategy. Investors should watch closely how this capital raise translates into tangible growth and improved financial performance. Key risks include potential dilution for existing shareholders and the price performance of the stock impacting the outcomes of the forward agreements. The opportunities lie in accelerated investment in critical infrastructure and renewable energy projects which could position DTA for future success in a changing energy market. My clear conclusion is that DTA is betting big on its future growth and is using sophisticated financial tools to achieve it. Alright, that is our breakdown of DTE Energy's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps. And subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.